All right. Good morning, everybody. Happy Monday. We are back for another week. Figured I'd do a little bit later of a start today. I try my best to not overlap Trader Nick's live stream. So yeah, today I just figured I'd do a little bit of a later session. Oh, goodness, let me wake up my vocals a little bit this morning. Um, Give me just 2 seconds because I've just got to check a quick email I got about something. I have a training coming up Wednesday, Thursday, Friday, Saturday. Oh, okay. Wednesday through Saturday. Okay. Yeah, I got a training coming up. So I was just making time shift. So anyway, yeah, we out here today, boys and girls. It was a late night. Watched the Super Bowl with the fam. Ate a bunch of goodies. Got a sugar high, a sugar crash, and had a headache when I left mama's house. That usually happens to me when I eat a bunch of sugar because I don't really eat sugar that much. It just doesn't do my body good. I'll start turning cartwheels for about a half an hour, but then after that I crash and burn hard. So whenever I do, like for a holiday or a big event like the Super Bowl, I'll overdo it on the sweets and then I'll suffer for it. That was my headache. Let me get my charts up here and we'll take a look, see what top setups we have for the day and all the goodies. So top setups for today, guys. And I hope you guys did have a chance to check out my Sunday video that I released 6 a.m. Sunday morning, this past Sunday, Super Bowl Sunday, yesterday, where I did kind of go through a bit of a review of the previous trading week, preview of the upcoming week. That's something that I like doing. And do a few videos the previous couple weeks or so, couple Sundays. But I think I've got some things ironed out in El Mundo de Tigre. So I should be able to stay on top of that from now on to give you guys something to look at on Sundays in preparation for obviously the upcoming week. And give you something to watch on Sundays. Okay. What better thing to do, right? What better thing to do than do a preview? So anyway, looking at let's go to the economic calendar actually, guys. Today, Monday, not a whole lot going on, just nothing but yellow folder, light impact events, a bunch of lip flapping sessions from the British pound, from the US dollar, as far as member Waller, member Bostic here in the United States. And then over in the British area, we do have member Man speaking, flapping his lips over there. And then outside of that, not really a whole lot of anything, guys. We don't really start getting into anything major till I do believe, tomorrow. Okay, we do have the retail sales numbers coming out. So that'll be coming out at 7:30 a.m. Central Standard Time. As you see over here, where we are projected to have some lighter numbers coming out. Okay, so the dollar just now kind of getting its footing a little bit. Will this potentially be a case to push the buck back down? We will have to wait and see on Tuesday morning on that. And that's it for Tuesday. That's it for tomorrow. So when we get over to Wednesday, we've got some more US dollar news, employment numbers here. Okay, the much anticipated non-farm employment change number. Okay, this is the report we were supposed to have on Friday, but it got delayed due to the partial government shutdown. So if we look at this number, the previous was 50,000. We are projected to increase by 20,000 to 70,000. So that would be a nice little boost for the buck. Okay. Any positive news data we could be getting in jobs right now would be a welcome sign. It's been an eyesore of late, looking at the US dollars employment numbers as a whole. There's a couple of them doing well, but a few of them that just are not. Hey, let's take a quick look at that while I'm thinking about it. We'll go over here to the macro scanners. We'll take a look at economic heat maps and the US dollar. Where at the bottom, you see all the red over here, guys. Okay, non-farm payroll, the last time we did get it in, if you remember, the forecast was for 66, but we were 16,000 short. So one of the eyesores of the employment numbers for the dollar. Again, we are projected to increase by 20,000 this Wednesday, so that would obviously be a nice welcome sign. The aforementioned retail sales number, remember, is projected to come in light. So the previous report was a bullish one from 0.5 to 0.6. So obviously this has the potential of turning red to the bearish, and then the non-farm has the potential of turning blue. So they would be kind of offsetting each other, if you will. But if we have a bullish number on the non-farm payroll, guys, that would be a pretty good trade-off if you're just looking at currency strength. Okay. I mean, obviously we don't like to see retracting retail sales numbers, but we all know how big this non-farm payroll report is. So if we get that positive boost as is expected, then that would basically keep your percentages about the same right here, as far as the percentage of high impact events exceeding expectations. But it just would be nice. It'd be a welcome sign, guys, because that's really what we need. We need some good employment numbers. Yeah, we do have a decent unemployment rate. Yeah, we do have pretty decent wage growth numbers, but jobless claims, JOLTS openings, ADP, now it's just not looking that great. Okay? Thankfully, we've had some pretty good growth numbers. Okay, talking about the PMI data, the inflation data as well. A couple neutral items there, but you got a bullish one for the producer price index. So, from unemployment rate up, all these are looking pretty good. So we'll see what happens. Looking at the Dixie, by the way, let's go have a look at it. We did get a boost, obviously, of late. Come on, go find you there. Okay, boost of late. Okay, over the last week and a half, but obviously we're getting quite the pullback today. The Dixie, it's kind of an inverse of what we saw last week. Okay, remember we had the dollar going up, and then everything else going down. Well, today it's the opposite. Okay, there's your Eurozone index going up, your Japanese index, your Swiss index going up. Okay, New Zealand, Aussie, and then your British pound, and your CAC for Canada. All of these are actually going up while the dollar is going down. Now, it's kind of in a fun little spot here, guys. I know last week I kind of went over the fact that we had bounced into the monthly and daily demand zones on the Dixie, on the dollar index, okay, which obviously was a pretty good push to the upside, also aided by the Kevin Warsh news of his nomination. And the market really liked his nomination. This was the Friday candle right here, that big fat candle. Now we're obviously retreating a little bit today. So, it's kind of it's kind of there in no man's land, kind of in the middle there. Are we going up or are we going down? Dollar strength. So it's kind of hard to argue against buying the dollar. I know we got dollar yen on here, for example. Now we got intervention risks if we try getting into a position on the dollar yen. Okay. Especially if you're trying to get into a longer term position, trade or long-term swing position. Well, you got the intervention risk that's been flirting with us for the last, few weeks or so. What's going on, Thato? How are you doing, my friend? Let me know if you got any specific currencies that you're looking at. Gold, silver, Bitcoin, indices, anything of that nature, or even stocks, guys. Let me know. I can take a look at any of the charts. But anyway, yeah, just getting back to the dollar yen, we do have a bullish sign. Now, again, it's going to be a little risky. Because if we look at dollar yen, I kind of have a line in the sand as far as a potential short if we start getting into that intervention territory. Now, I was looking at this daily supply right here on the dollar yen, because if you see, we have this basing, this indecision candle, and then just 3 big ugly drops, big strong downward candles. Well, that tells me that we must have some fireworks going on in here potentially. which is again in the intervention risk zone. Okay, as far as shorts, the banks, the Bank of Japan starts buying up the yen, or I guess selling U.S. bonds, or however they combine all that, for a downwards move on the dollar yen strength, dollar weakness on this. So we'll see how that all works out. What's going on, Christian? Look, Thedo is looking at shorts on the pound Aussie dollar. Let's take a look at it. Pound Aussie giving us a bearish -5. I like it. Pound Aussie. What did you guys think of the Super Bowl? Did you guys watch the Super Bowl at all? Let me know. I want to see that in the comments. While I'm looking at Pound Aussie here, I will say that I got to be honest, I was rooting for the Patriots just because Coach Vrabel used to coach my Tennessee Titans. So I kind of wanted to see him get his, just to kind of rub it in the face of, the Adams family that owns the Titans since they fired him. But it didn't happen. There was just no offense. There was just no offense at all. The second half, their offense looked good. I think, what's his name, passed for 250 yards in the second half alone after only passing for 46 yards in the first half. So it's like, well, why didn't you do that the first half? But anyway, congrats to the Seahawks because their defense was a killer this year. So awesome to see Sam Darnold, the castaway from these other teams, get a Super Bowl, especially after a 14-3 season the prior season in Minnesota, and then they cast him away. What the hell are we talking about here? It didn't make any sense. So that's a nice rub in the nose of the Vikings, as far as I'm concerned, for getting rid of somebody that just won you 14 games. But anyway, I digress. What am I looking at this week, Christian, you ask? Well, right now, I'm kind of flirting around with this NASDAQ trade. I got a NASDAQ short going on right now because it is the NASDAQ and the S&P are both giving me some bearish signals over here. Okay, it's not something that I traditionally like to do, shorten something that's just having a big giant run up when we're looking at it on a monthly or a weekly time frame. But I thought I would get a little bit of an attempt at shorting this thing. As far as the NASDAQ. So basically on that trade over there. Yeah, and we'll take a look at my alerts to give you a little more in depth of, items I'm looking to possibly trade this week. But as far as the NASDAQ goes, I was basically looking at the fact that we had a 4-hour supply zone right here. This little basing action before a big strong drop. That also coincided with a couple things. So number one, we did have this blue dashed line, which if I go back to my daily, it's kind of a previous resistance point back here. Okay. And it turned into support here, turned into a wick right there. Couple wicks on the resistance side here. So I kind of felt like that might be a pretty decent spot to possibly look at just taking a little short on this thing. As you see, okay, look at this. I mean, it beautifully bounced in and wicked immediately. Okay, look at that wick right there. Let's go down to a smaller time frame. Okay, there's your 1-hour chart right there. Okay, had a nice, just nice bounce into it. I was also keeping an eye on a few exponential moving averages. Okay, here on the 1-hour chart, I was looking at the 200 EMA, and it just bounced perfectly right at it. So I had confluences of the 200 EMA, the supply zone itself, and then this resistance point right here, along with the bearish rating. So for me, I thought I would take a little stab at this. Now we got a pretty good boost, push away initially, and I got a kind of a profit target down here at the swing low. That's kind of what I'm looking at. More of a longer term setup, multiple day trade. So we got the nice push away, but then now, as you see, it's just kind of retraced itself over this last, actually, 15 minutes? Or something like that. Yeah, just kind of ever since the market opened up, it's just been going back up, the NASDAQ. So we'll see what happens. I'm going to stick with it because I have a stop loss clear on the other side of the supply zone right in this area right here, guys. Okay, this is kind of where my stop loss is. So that's what I'm looking at. And And I gave it some extra breathing room just because, again, I don't really like the idea of shorting indices that when you scale out, they're just going parabolic. This is your monthly chart, right? Okay, we've all seen these charts, just like gold and silver, just been parabolic. Now, it's obviously been basing. This is a monthly chart, so over the last few months, okay, it's been basing sideways. So, but yeah, I just thought I would jump in on this. It's pretty much the 50% retracement of this swing high to this swing low. Okay, we're right in the middle of that. So that was kind of another odds enhancer, if you will. But yeah, and it's funny because I'm in this trade on my 250K challenge account, and I was trying to get into the same trade on my 100K challenge account, and they're both trade locker. But for whatever reason, my 100K account was not accepting the trade. So I don't know why it wasn't. I don't know. I might have to look at it. But I should be in this trade twice. But as it stands, I'm only in one of the two accounts I have. And then I've got a 100K funded account, instant funded account that I have that I just recently acquired. I had to go through an interview process to get that, which was kind of cool because there were like 400 different people that either applied or clicked apply or something. But out of that 400 plus that clicked apply, I was one of the 7 that actually got it. So it's actually kind of cool. Kind of cool to see that they picked me out of all those people among the 7. So anyway, I have a training for that. Ooh, and that's a good note to bring up, by the way. So starting Wednesday, Thursday, Friday, Saturday, I have a 4-day training, and it's actually during the London session. So I'll be up early. I'll be up. Well, I have to be logged on for the training by 2:45 a.m. my time, Central Standard Time. And then those trainings will last from basically 3 to 10 a.m. my time. So I won't be doing on Wednesday, Thursday, Friday. I won't be doing that my normal early streams. I'll try to do them after my stream. I just got to make sure I'm not, going to droop and fall asleep on you guys since I won't be getting much sleep because I do not know how to get to bed at a decent time. It's usually around midnight to 1 o'clock in the morning for me guys when I get to sleep. And then I turn around and get up at like 5:30. So I've gotten pretty decent lately about taking about an hour nap midday after, during like the lunchtime doldrums when the market's kind of slowed down a little bit. So yeah, Wednesday through Saturday is going to be an interesting, few days for me. So yeah, just an early heads up, guys. I'll be not doing my normal 6:30 my time stream. I'll try to still do it. I think I'll be fine. So I'll probably do like, I finish at 10 a.m. the training. So I'll probably do like 11 a.m. to 12:30 or something Central Standard Time. But I'll put a posting on this channel on the posts whenever I figure that out for you. Man, Christian, I'm bad about it. I'm yeah, like I say, it's usually about 12 to 1 a.m. when I get to sleep, and then I usually get up about 5:30. So the math ain't that great. That's why I've been incorporating a midday nap. You get so infatuated with something or so passionate about something that it's all, I don't know. It's weird, but part of me feels like every waking moment I want to get good at my craft, right? So I overdo it sometimes. When I should be asleep, I'm still out here studying charts. It's not good. I gotta balance it out. I had a conversation with a classmate of mine just last night about it. I'm like, yeah, I need to cool it. I need to get some more sleep. But anyway, so that's my short, guys, on the NASI. The S&P likewise has a short bias. Okay, it's also got a -6, so it's actually a point higher. And I got to be honest, in hindsight, I kind of like it now better than I do the NASDAQ. Okay, so what I may end up doing is just stick with the NASDAQ trade on account A, and then on account B, what I might do is look at a possible short on the S&P, because right here, guys, we got a nice looking, this is a pretty good looking 4-hour supply zone right here. You had a nice bullish or bearish candle rather coming out. Now, a point against it is the fact that right after that strong candle down, there was no continuation. Because you see, we had a bunch of green candles and kind of a consolidation right here before another drop. So that might deter me away from this idea. But if I get in it, it's just going to be a partial position, kind of like dip your toes in and test the waters, kind of thing, guys. So again, since I was not able to get into the Nasdaq trade on this other one. But I like the overall, the swing high and swing low of this. I mean, that's obviously high on the curve. Okay. This is in the premium zone. So I'd be selling at a pretty good spot. The swing high. Sell where it's expensive, right? Sell where it's pricey. So from that perspective, because at the end of the day, from this swing high to this swing low, that is an impulse leg, impulse trading activity, because we broke structure here, we broke structure here. Before finally dropping into this demand zone over here. And as you can see, this demand zone is where it caught a bid and flew back up. So perhaps we could see a little bit of exhaustion here. I don't know. We'll find out. But, I've got an alert set, so we'll see what happens on that. And as far as the Dow, it's still kind of neutral, but I got to admit, guys, I freaking love this chart from a technical perspective. It's not really jiving with the fundamentals, because this is clear as day. I mean, all kinds of resistance, is it not? Okay, former resistance right here, whole bunch of points, and then we broke through it. Is it, would it obviously, it's obviously feasible to see a return to that price point for a potential long. Former resistance becoming support. Now, obviously, I like to look for unfilled orders, so I don't see a demand zone right there. Okay, there's a 1 hour, there's a 15-minute. Yeah, all you got is just like a bunch of wicky candles above it. So that just doesn't look attractive to me, guys. Okay, this is a 15-minute chart, and I'm just not getting any strong demand. Okay, now this is a sexy candle right here, this leg out candle here from this, basing area. So maybe we drop a little lower. I don't know. Let's go back to a 1 hour. 2 hours is going to look good. Okay. So if we're looking at pretty nice looking candles, look at this indecision candle on a 2 hour time frame. I like that a hell of a lot better. I wish this candle was right here. If this candle was right here, oh, that's a buy all day long. You're talking about former resistance becoming support. You're talking, and obviously if we had bullish fundamentals, then obviously that would help as well. But as far as the Dow goes, it is neutral. Where you at, Dow? I'm sure you're in the negatives. Yeah, -1. So see, that's just not a strong enough reason to buy or sell. And look at this. Nasdaq has actually retreated to the middle, the trade I'm in. Yeah. So now that's completely off the list. Let's go refresh this screen real quick here. Yeah, we've had some changes. Now, I got into this trade last night, in all honesty, before I went to sleep, and it was giving me a -5. And I was a little hesitant about getting into it, thinking, with this positive, with some of these positive US dollar movements we've had lately, I don't know. It did make me think twice about it. But hey, you can't win if you don't get in. The Dow looks way better than the other indices technically. Problem is, fundamentally, it ain't looking good right now. Yeah, exactly. Yeah, exactly. I mean, if we go back to the neutrals real quick and look at the fundamentals on it, zero. I mean, it's straight up zero. It's not giving any type of bullish or bearish, signal. The only possible signal you're getting is a -1 on the sentiment score. Speaking of, let's go have a look at, ladies and gents, let's go have a look at the COT data, okay? COT data, as always, comes out on Fridays, usually around 4 to 5 p.m. my time, okay, Central Standard Time. But what we see is silver getting bought up. Look at this. Silver, a net percent change of 6.2%. That, my friends, is a pretty good bullish signal from the banks and the institutions, the big boys on Wall Street, the ones making all the money, the smart money, okay, the sharks, whatever kind of word you want to give them. So that's pretty good. Now we're getting a neutral rating. Unfortunately, it's still a -3 right now, a -3 from a, and it's mainly, guys, from the technical side. Okay, obviously. Let's go look at silver on the chart. Look at it. Let's have a look. Let's have a look at a daily. Okay, we obviously had the death drop back on the 30th, and we've had a little bit of confusion ever since. Now we do have, I was kind of keeping an eye on this former resistance point back here at one point, even this one here. That's basically where we're at right now. So there's just a lot of confusion right now. Remember, though, the banks increased. So when they increased, remember that report is accurate as of Tuesday, right? So look at this. Let's go find the Tuesday candle. Okay, there's the Tuesday candle. This right here is the Tuesday candle. The COT report said that as of Tuesday, the banks have increased their longs by 6.2%. So that, that 5 days prior is 1, 2, 3, including the Friday candle drop, 4, 5. So basically we had this big ugly drop. Think about this. This is profit taking. Okay, this is some other geopolitical stuff as well. Some easing, Iran tensions, promises, whether we'll see if they're kept or not. But we had this big ugly drop. But yet the banks, if I'm just looking at simple, candles on a chart, seems to me like they started scooping up their positioning when price came down here in this area. Would that make sense? Okay. So if they're increasing, if they're accumulating inventory down here, okay, oh, by the way, that's a 50-period EMA where price started bouncing around. Is that a sign for things to come? I mean, I drew up this daily demand down here, and look at that. It just bounced in beautifully and has now been going up. So, if I were to do anything, I'd rather buy this market. But the problem is it's given us more of a bearish signal than it is a bullish. It's a -3. But remember, that's just the technicals. Okay. Again, straight up zero on everything else. So I don't know. From a technical aspect, I could definitely see getting into a silver long, but it's just too crazy right now. I don't really like getting into trades like that when you got just big, gigantic, ugly drops. I really want to start seeing some higher highs, higher lows forming, or lower lows, lower highs if I'm trying to look at it short. Right now, the only thing we've really got is lower lows and lower highs on silver. Silver's a monster. That's right, Christian. Just won't stay down. Yeah. Yeah. I mean, silver was given. I mean, it makes sense to me why he was short, because at least for like a day or two, silver was the top setup for a short. Silver was giving us a short. But, it didn't last that long. Oh, no, let's go look. I'm pretty sure that was silver. Let's go look at the silver history chart real quick. Because, I was even considering it. I don't know. Let's see. Yeah, right here. So February 3rd, 4th, and 5th, it was giving us a -5 score, right? It was giving us a bearish score, but then it's just started retreating back to neutral where it's at right now, right? So, yeah, again, that's what we get for having a dynamic list. The Edge Finder, as great as it is, it changes. It changes every 5 minutes. It just depends on, how the economic calendar on here is released from, Forex Factory or whatever. And since it is a -3 score on the Edge Finder, neutral, I'm keeping an eye right here on this 4-hour zone, this 4-hour supply zone, because we had a nice drop. And then inside of that 4-hour, we got a 1-hour confluence right here. See that indecision candle? So I'm keeping an eye on this spot. And if silver starts giving us back to another, -5, -6, well, I'll be a lot interested. If it doesn't, if price comes up here into this supply zone and we're still stuck at -3, -2, -4, I'm probably just going to ignore it. But if we can get some, bullish data for the US dollar, which, pretty close to an inverse relationship with silver and gold, if we can get some bullish data, if that NFP report comes out and exceeds expectations on Wednesday, like it's talking about, if we get a surprise hot reading on the retail sales number, then this trades out, out of the window. If those data points come in negative or bullish, I'm sorry, if they come in bullish, then I'm going short for the dollar. Guys, it gets kind of confusing sometimes. Yeah, I'm talking about these readings over here. Okay, if we get bullish readings on retail sales for the dollar, and if we get bullish readings on the employment numbers on Wednesday, then that's a good reason to short silver, because by then this stuff will update through the algorithm and give us, probably a -5 or close to it. So we'll just have to wait and see. That's really going to be my decision maker on silver, is what we get from the non-farm payroll. Because by then, obviously, we'll know the retail sales numbers. So that's kind of my plan to attack silver. Because if we do get that, again, if we get those bullish readings, then silver likely will jump on the top setups for that short. So that's that. What else did we have? And with the expectations, guys, of obviously of just being in it for a couple days. Definitely not a position trade. I ain't trying to put a long-term trade on the metals when all they've done over the last X amount of months and year is just went flying up. Do I stay out of trades when there's high impact news? Well, yeah, if it's a scalp trade, but I don't do a whole lot of those. The thing I like the most about focusing the most on my edge, which is daily 4-hour confluences, the thing I like the most about that is, a lot of times the news doesn't really affect it, because I'm usually too far away from a stop loss or a take profit because I have such wide ranges. As a scalp trader, yes, you don't want to even look at a chart. You want to take your mouse and throw it behind your computer so that you're not trying to hit the buy or sell button. But when it comes to swing trading, where I'm trying to chase down 100 pips, 150 pips, 200 pips, I usually have a stop loss far enough away to where, even with some whipsaws and, big, strong up and down moves when those news releases happen, it's usually too far away. The way I look at news, or the high impact news, let's see, how do I put this? So, just from the 30,000 foot view, prices, and I put this on the Sunday video from the other day, yesterday, prices like to ping pong back and forth between higher levels of supply and demand. That's really what happens. It's orders chasing orders. Okay. A classic example is just looking at the Dixie. I know I mentioned this as well. Okay. Prices like to go from zone to zone. So we created a supply zone here. We had a big push down and we bounced into the daily demand zone. And now we're pushing up. Well, my expectation would be we'd go to the next zone. Okay. The next supply zone, which is up here. Now, I'm not saying it's going to happen all the time, but a lot of times, most of the times it does. It just bounces from zone to zone, swing high to swing low. So if I know that and I start looking at economic calendar releases, well, basically what the result of those report releases does is speeds up what was going to happen anyway. Okay. So the price is going to bounce back and forth between the zones. But with volatility, with big swings and, wicks that chews up people when they're trading on those smaller time frames during news releases, the news release just speeds up what was going to happen anyway. Hopefully I explained that. So yeah, I don't really worry about it because I stick to the technical look And obviously, if you have a big giant uh, miss or a big giant disparity in a hot report, then that can obviously change things. But assuming normal report releases where you either meet expectations or you miss or exceed it by just like a small amount, it's just going to speed up what was going to happen anyway. So I tend to just stick to you know the reality of it ping pong in between those higher time frame zones slash support resistance, right? I mean, right here, great example. What happened? We had this strong swing high before drop. We came up once, touched it, dropped, came up again, touched it, dropped. And then now we've created a new little swing, reversal point right here. And then if we scroll all the way back, we was looking at this demand zone in here. Okay. Now look at this. So that demand zone touched here and had a reaction to the upside. And then it came down and touched it again and reacted to the upside. And now we're down a third time. Now, I would think that that might take away these two touches over here. Well, that one just barely touched. This one went in just a little bit deeper to collect some liquidity that this one did not touch. It's kind of hard to see. Let me zoom in a little bit. See if, hopefully this makes sense. So right there, we just barely wicked in. This wick went a little deeper. It had to go deeper because this point here collected liquidity, collected unfilled orders up until that point. So if we're going to get a bounce from this area, then this price here has to go deeper to find price points with unfilled orders. Okay. And in both cases, you got a big push up. Now we're down a third time, and we're deeper than the previous wick, right? So this is kind of long-term megaphone type patterns, okay, where we're getting lower lows in order to find more and more liquidity and get those bounces. So, that's kind of and it held. Now it wicked through the bottom of it, right? So at this point, this is a dead demand zone. This is old. That's why I color it light. It's telling me it's not a fresh zone. Well, it wasn't a fresh zone as of this point, but on a dollar, on a daily time frame, on a daily demand zone, it's obviously a wide range. Okay, if this were a 15-minute, if this were a 1 hour zone, I wouldn't have any interest in, trying to reuse it. But because we're on a higher time frame, that's just it's much more of a major zone. So it's okay to go a little deeper and possibly get that reaction. We've done it now 3 times. Bounce 1, bounce 2, bounce 3, but each time it was on a lower low to go down a little deeper to find more unfilled orders that these points did not touch. So that's why I feel, if I'm just looking at this on a technical, from a technical perspective, we're down here now. I would assume we would be going and finding a new swing high, a new supply zone. And we very well could catch one in a smaller time frame, right? Now, this is just the daily. If I go to a 4 hour, if I go to a 1 hour, perhaps we see something that looks a lot stronger. But I tend to kind of make my main decisions from the daily or higher, daily, weekly, monthly. Hey, Christian, thanks for stopping by, man. Yeah, I'll be back on tomorrow, 6:30. And I'll also be on Trader Nick's site as well. By the way, guys, keep in mind, I am starting to jump in with him some more on his A1 live streams. Now, I've got to talk with him because I got to fix something on the schedule. But for tomorrow, 9 a.m. Eastern Standard Time. So that's 8 a.m. my time. Okay, 8 a.m. Central Standard Time, 9 a.m. Eastern Standard Time. So yeah, I'll be on tomorrow. Hopefully you guys can come and check us out over there. So yeah, hopefully I explained that well, as far as the news piece for you. Give me 1 second, guys. Gotta fix something. What the heck? No. Sorry about that. 1 second, guys. I was looking for a piece of paper. Anyway, all right, so back to the setups. Let's go take a look at some of these. Kiwi yen, Kiwi CAD. The Kiwi yen's been quite resilient. Okay, all these other ones have kind of dropped in strength of late. The Kiwi yen remains at a very bullish, very bullish bias. So let's look at that chart. Kiwi yen, Kiwi yen, Kiwi yen. There we go. So clearly up. Let me refresh or reset my chart. Okay, clearly up. Broke through this former resistance point. We've been kind of dancing around it, dropping through it, going above it. So this is another example of, like we just showed on the Dixie. Okay? You have a swing high. Then you have the next time it comes and revisits, it goes a little higher, collects liquidity from these short sellers. Okay? These short sellers that aided in this big drop, leaving their stop losses above. What are their stop losses? Their buy orders. What do banks need to flip price down? They need buy orders to fuel their sell orders. So they did that here. Okay. Come down here, you base again. This time you base and you start going up pretty strong. You had 4 green candles. You broke a structure. Okay. So that makes this a new impulse leg, impulse movement. So if we have an impulse, I want to find the best looking zone in that impulse leg. Remember, impulse legs break structures like this one right here. Okay, as soon as we broke that structure right there, as soon as we broke that structure, then that told me that there's something strong in this move right here. So you go to the origin of the strong move. Okay, that's down here, obviously. You do see we have a candle with a big rejection on the bottom of it. Okay, if I just, oops, I didn't mean to do that. Big rejection on the bottom. This big wick. Okay. So there's something strong up in there. Let's go find it. Okay. 4 divided by 4 is 1. So I want to go to my 1-hour chart. And I got the exact same looking candle. Oh, wait a second. The heck was that? I got the exact same looking candle on a 1-hour time frame that I had on a 4-hour. Okay, there's my 4-hour candle. And there's my 1-hour candle. So they're like a spitting image, are they not? So that's a pretty good confluence point, if you ask me. And it's at the origin of this overall strong move up. So I wrapped a alert just ahead of that, just a few pips ahead of that. So if the price comes down to this point, it's going to scream at me. And then I can start looking and seeing if I'm going to get a break, if I'm going to get a confirmation type entry to the upside, bullish engulfing candle, a candle with a wick underneath it, maybe an inside bar. And then more importantly, am I going to have volume spread analysis candles start to grow down here? Okay. Showing institutions stepping in, smart money, whales, that kind of thing. So that's the goal here. Obviously, I'd like to see price drop, touch the confluence point, which is the 1-hour inside of the 4-hour. And then we can look for a potential confirmation entry like this. Okay. Break this structure right here. I'm just going to get that out of the way for now, since we already know we're in the zones. Oops. But anyway, yeah, we get that movement. Maybe we get a new demand zone, or you can even look at a 61.8 fib retracement. Okay. I love personally looking for unfilled orders at any chance I get. So I'm looking at this new impulse leg. Okay. Again, I personally prefer to look for smaller time frame demand zone that creates itself to aid in this impulse leg, which broke a structure. But if you really like the trade, if you really like your analysis, just go grab your fib tool and go swing low to swing high. Then maybe you can just look for a 61.8 retracement, or even a retracement down to the kill zone, which is a whole different set of fibs, 71 to 88. Okay. So, I mean, you got all kinds of options there, at least the 50, but preferably the 61.8, or even a little deeper if you want an even better price. Okay. 61.8, but also you got the kill zone. I call it the kills. Well, I color it red because it's called the kill zone. It's just kind of a nasty word, right? Kill zone. Go look it up. It's a pretty cool little fib strategy all on its own. Okay. So that's your Kiwi yen. That's one of my favorite setups, but I mean, it may not be something that hits the day. It might take a day or two for it to kind of do its thing. But it is a spot. Nevertheless, I'm keeping my eyeballs on. And oh, by the way, we do have a kind of a trend line I started drawing back here that is flowing up. We've danced around it a little bit. We got another nice spike away, another retracement down that touched it beautifully before lifting off. So perhaps that can even aid as an additional odds enhancer. Okay. Pretty good odds enhancers. Pretty decent odds enhancers right here. I gotta say. Give me 1 second. Gents, ladies, I just gotta take a look over here. Atish Day Sessions. Damn it. I just gotta send this email real quick. Sorry, guys. Not sure if you just wanna. Not sure. Hey, Jim, just 4-day trading. I mentioned you a while back, a little later than I thought. But it ended. What you recommend? All right. I'm back, guys. New Zealand CAD. The heck did I do? New Zealand. What is going on? My thing was freaking out. New Zealand CAD +8. Let's go have a look at that. Daily chart. Okay, this thing's been spiking pretty good of late. Well, it was, and then until this last couple weeks where we've kind of been basing out. Where have we been slowing down? Right here at this swing high. Okay. Former resistance point back here. Got a nice wick there. We've been driving down. We kind of go back and forth. So this has just kind of turned into a little bit of a chop zone, if you ask me, on a daily chart. So if I'm chopping around, I definitely don't want to be buying in the middle, diddling in the middle. See all those wicks? That's what you call nothing but indecision. Nothing but agreement. Okay, it's all in how you look at it. Indecision, agreement, fighting each other by, bulls and bears fights. Bulls went out here. Bears quickly slam them back down. Now the bears are winning, but then the bulls step in and push back up. So, perhaps we look at a smaller time frame. Go to a 4-hour. Okay. So here's our chop zone here. That's where the rookies play and get chopped to pieces. So if you really want to buy somewhere in this area, at least go to the bottom. And on the bottom, we do have a nice little 4-hour demand zone. Now, I don't like it that much because when price pushed away, and it did push away quite nicely, but it didn't break the structure. Yeah. So anyway, we, kind of the reason I'm only giving this any time of day is because we did have a supply zone right here and price wicked through it. Okay. So at least in this point, at least in the lower part of this chop zone, okay, which was a liquidity grab all on its own because we went below all these wicks right here, talking about these couple candles here. But this price point was strong enough at least to push through a supply zone that had some pretty decent volume spread analysis activity coming out of it. Okay. And then that, of course, is, part of the catalyst that pushed price down below these lows over here. So I do want to keep my eye on this. Now that's a 4-hour, but if I divide by 4 and go to 1 hour, okay, I got a 1-hour demand here as well. So I got my alert kind of, at the upper end of the 4-hour with the intentions of if I were to want to place a small buy on this thing, I'd be getting on it, getting into the trade based off the 1 hour chart, the 1 hour demand zone we got right here. Because on a 1 hour chart, I mean, it looks pretty decent. Hey, we broke this structure here, and then obviously we broke the supply zone. So I got to at least, keep an eye on it. I won't be placing like a full position on it, but tiptoe in, same thing, get a push down. And obviously it looks, it's obviously going to look its own way, but if we get a drop in there, we bounce and hit the 1 hour. Well, now I want to see a break of structure. My nearest break or structure point would be right here. So if we bounce in, bounce up, close above this little swing high, and at that point, this turns into an impulse leg on a smaller time frame. So let's oftentimes you'll find a brand newly formed demand zone on here, and I want to wait for it to be under the 50%, preferably under the 61.8. So we get a push back down into a newly created demand zone somewhere in the bottom half of the impulse leg, and that's where we would actually buy. Okay. We broke this structure here, and then we retraced to a newly created demand zone. And that is your buy point, ladies and gents. Okay. Right there. Right there is your initiation. So that's a pretty decent setup I'm looking at on New Zealand CAD. But I don't even care about this chart unless it shows up over here, in which case it does. Oh, by the way, just in case you guys did not know, Trader Nick does have the Edge Finder for free this week. Free. Okay. A 1 week trial. FREE. Let me see. Pull up my Telegram here, guys, for you. If you go to A1 Trading, then you will see somewhere here. Somewhere here. Where's it at? I lost it. I can't find it. But I'll tell you what, I will find the link and put it in the description of this video when I'm done. But he did give us a link to pass out. So if you guys are wanting to try out the Edge Finder for free, the full thing, then you can definitely do that. So anyway, yeah, I'll put that in the description after. We've looked through New Zealand yen. We've looked through New Zealand CAD. Let's go look at CAD yen and Aussie yen. Okay, those are giving us some bullish scores of a 7. CAD yen, Aussie yen. Okay, CAD yen right here. As always, start off at the higher time frames. We got to look at a 30,000 foot view, okay, and see where prices are at. There's your weekly supply, but we're a long ways away from it. Okay, that may look close, but we are zoomed out on a weekly. So you do have a very strong, at some point here in the next, few weeks or so, we might have to start paying attention to the fact that we're in this super strong supply. And I know it's super strong because the bottom just fell out of it. Okay. This is July of 2024. Okay. So it's an old supply zone, but hey, just because these things are old, don't mean you can ignore them. Don't mean you can't afford that, man. You got to keep your eye on these. So this is another important reason to zoom out to the higher time frames. It's a super strong zone. Again, I think we're probably, a couple, 3 weeks away from it, or based off the way we've based sideways the last couple months. Okay. It could be even longer, but who knows? So anyway, that's a ways away. Not worried about that. Daily. Okay. If we go to a daily, the closest daily demand zone that I have that I really like is, you guys clearly see I got a yellow one here. Now, part of the reason I like this, although I hate the fact that there's a bunch of candles to the left, Okay. That could potentially be way too much time for the banks to have in order to accumulate their full position here before this strong push up. But I do like it because, or partially because we had this, a few weeks ago, we had this drop that got kind of close to it, but the buyers stepped in right here. So think about this. Okay. The buyers stepped in back here. We're talking about January 27th, 28th. Okay, they stepped in and pushed price back the other way. So where are these buyers putting their stop losses? Okay. They're putting their stop losses down here, are they not? Meaning they're putting their sell orders down here, right? Where are their sell orders located? Okay. They're located basically in this demand zone. So you got unfilled orders from a demand zone plus liquidity. Okay. That's a confluence all by itself right there. All because of these buyers that stepped in and had the strength to push price up to the other end where we're currently at, the swing high. So that right there is why I was interested in this demand zone. I feel like we got a pretty new, fresh, supply, a fresh liquidity patch right there. Because remember, I just got through criticizing the fact that over here we had way too many candles in this zone. But then when you create a liquidity patch like this, okay, there's still going to be unfilled orders from here. Maybe a bank or a hedge fund, maybe they waited till the last day, the last few hours of this before price pushed away. So maybe they started their positioning, but they failed to get it all filled before price ran away. Well, these traders or these hedge funds that did buy here towards the end of this consolidation, you can bet your bottom line they're going to be interested in possibly filling the rest of their order back here. This is more of some of their position trades, right? Longer term position trades or long term swing, however you want to look at it. I would say that's more of a long term swing, I would call it. Okay, because we're talking December. We're talking 2 months. So that's basically 2 months ago, right? Yeah. You can call it what you want. I would call that a longer term swing trade. I wouldn't really call it a position trade unless it's 6 months or longer. Okay. But yeah, I think there's probably a pretty decent liquidity patch here of stop losses. Okay? There should be some sell orders here. Sell orders have to be the fuel for the bank's buy orders if and when price returns. Okay, price comes down, clears out this liquidity, takes the remaining unfilled orders from here, and we get a push up. That's the play I'd be interested in for the CAD yen. Now, if we continue to get price, because this is not yet, think about this. So this is not yet, in my opinion, this is not yet an impulse leg. Okay. Why? Because we have not yet broken that structure right there. We have to break that structure in order for it to be, accurately called an impulse leg. Now, if we break this, well, first I want to say, if price where it's at now just reverses and comes down, this trade is in order down here. But let's just say we do get a push through the structure and a close. Then I might be interested in a retracement to the bottom of this impulse leg, which would be here. I'd have to go to a smaller time frame to find a zone. Okay. This would be a possibility. And I'll just color that yellow just to differentiate. So this is an if-then situation, ladies and gents. If price from where it's at now just bottoms out, this demand zone is in play. But if price pushes through and breaks the structure, then this point is in play, this leg here. So we'll have to go down. On a daily time frame, I don't really like calling this a daily demand because we wicked in right there. So what I'm going to do is draw me a yellow box, but I'm going to draw it light yellow. This just tells me, hey, there's something sketchy about this. I don't know. I just don't know. Okay. Because again, we wicked in. It's kind of hard to see, but this candle wicked in the top of this daily demand. So I can't 100% confidently say that this is a strong demand zone from a daily time frame. So now, best thing to do is go down to a 4-hour and see if we can find anything in that zone on a 4-hour. And it looks like we've got, wow, not a whole lot of anything. Look at this. So all these candles, okay, I'm going to close, or I'm going to turn off my drawings for a second. So remember, this is our daily demand. But remember, this wick wicked into the top of the demand zone, okay? So now that we've come down to a 4-hour, I have to find a gap. Do I have a gap down here? Well, none of this has gaps. This is all efficient price structure. And what do banks like to do? They like to attack inefficiencies in the market. What is an inefficiency in the market? A gap, okay? Acceleration gap, runaway gap, novice gap, fair value gap. Call it what you want, but it's got to be a gap. It's got to be a spot in price where demand heavily exceeded supply so much that it left an inefficiency. And if I'm looking for inefficiencies, I think about the best thing I have, which is probably going to, and I'm not too excited about this, but would be right here. We had just a little bit of a gap right here. Let me turn my drawings on real quick. Okay, if I draw up this fair value gap, this is what it would look like. Now, does that puny little gap look exciting to you at all? Especially considering that wicked through the gap. Now, it didn't quite touch, or did it? Let's go zoom in a little bit. I don't know. Did that zoom in? Didn't. So the top of this wick, the bottom of this wick did not touch this candle here. So yeah, there's still some gap left, but the bottom gap. So it's just a little too weak for my taste. This gap or something like this, where it was bigger, that's a different story. But the fact is, that's all the gap you got. And there is no gaps down here. This is an efficient price structure. So I'm probably not going to be interested in this leg whatsoever because I don't get a daily gap and I don't get a 4-hour gap. What about a 1-hour? Okay. Do I have a 1-hour gap? Look, and this is as low as I would go. I wouldn't have any interest in going any lower. Okay. Daily demand. This is our 4-hour demand with a very puny gap. But do I have a 1-hour gap? And I still don't. Okay. I still do get the tiny gap here in that same spot where I had the 4-hour. But again, it's not strong. That's just not strong, guys. See, there it is. There's your 1-hour gap. That's too weak for my taste. So after seeing that I don't really have any strong inefficiencies in the market right there, I'm absolutely not interested in this, even if it breaks the structure and comes down. So I still stick by this move here. And I'm going to ixnay this move here. Okay. There's no fair value gaps. The daily already got mitigated. So I'm just not interested. And delete that just so I don't even get, just so it doesn't flirt with me. So anyway, that is your CAD yen possible trade. Thing that's going to happen today or tomorrow, most likely. Might take a week or so for this action to happen. But what I could possibly do if we looking at some smaller time frames a little closer to home. Okay, maybe I get really remembered, guys. I did draw up a 5-minute zone, I think. Look at this. Look at this 5-minute zone I drew up last night. See this for a second. And I'm just going to get rid of these drawings. Think about this. This is actually a pretty good spot, pretty good little point. Okay, you see I had two demand zones. Now this one I think was a 15. but this closer one was right here. Now, with a bullish signal, okay, if I have a pretty decently strong score, then I'll be okay with some of the scalp type trades. In other words, go down to 15-minute time frames or even 5-minute. Well, right here, what happened? We based, we had a big push up. That's something I did not like. Okay. Kind of bounced into a supply zone there before dropping down. But when we got close to the zone, it did an about face and went back up. So what happened? There's buyers here that stepped in, right? These buyers pushed price up. And where did these buyers put their stop losses? Okay, somewhere in that area, right? We don't know how deep it is, but there are orders there. There are sell orders there. So if price comes down, you get sell orders that fuel these buyers' buy orders, right? Not to mention the unfilled orders. So what happened? Price came down, wicked in beautifully, now pushed off. That was a good trade right there. Okay. And that was a strong push away because we broke this structure. So there you go. That was a winning CAD yen trade right there on a 5-minute time frame. Even despite the fact that we did not break this structure, which is part of the reason I didn't really have interest in buying this, because we could not even break this structure right here. Okay, all these ugly wicks. If we would have come up a little higher, then that would have made this a lot more appealing. But it didn't. Thus, my eyeballs weren't on it, and put an alert on it because of that. But despite that, despite my dislike for this zone, it still worked out. So it just goes to show, and I'm way too damn picky sometimes about these supply and demand zones. But over the long run, these types of moves don't always work out because it didn't even show that it was, strong enough to break a structure, strong enough to break a supply zone. Remember, if it's a strong supply or demand zone, it typically will take out another opposing supply or demand zone. In this case, we didn't. So I didn't even have my eyeballs on it, but it worked out anyway. Guys, I'll be on another so if you have anything else you'd like me to check out, then just holla. Let's look at, let's see. I went over the top 3. Oh yeah, Aussie yen. I don't think I went over that one. And this is probably going to look quite similar. Kind of similar. Okay. Daily, yeah, just up. Now, of note, this daily, or was that a weekly? We had weekly. So of note, we had a weekly supply zone back here that finally got chewed through. Okay. So it's just another odds enhancer saying, hey, we've got some pretty good strength, right? Because it was strong enough, price was strong enough to break through a high time frame. So, yeah, I just wanted to point that out. Now, this price has moved quite a long ways away. I got too many lines on here. This price has moved a long ways away from the swing low, has it not? But that's why I had no interest in buying in this market, because we still had yet to go through this zone, the rest of this demand zone. But we did that. So now that we've done that, perhaps we get a little bit of a push up and a return down, and then we can look at the top of this resistance and see if we have any demand zones. Do we have a newly formed demand zone on a smaller time frame? Okay. There's a 4-hour zone just underneath the swing low, or the swing high, or the former resistance point. You see I've got an alert there. I've got a 1-hour demand zone in there as well. So that's going to be of interest to me. It's very similar to the New Zealand yen that we just looked at a little bit ago. Okay, very similar. So break structure, we've done that. Now all I need is a retracement back to this area, this swing low. Okay, swing low, 4 hour, 1 hour confluence, all day long right there. Okay. Added confluence. I wait till price comes in, and then I break a structure on the opposite end. Okay. It's going to be a temporary downtrend, is it not, on a smaller time frame? Yeah. So if it's going to be a temporary downtrend, I've got to see a break of structure. So price comes down, okay, and then break the structure like I just showed earlier, and then a retracement to buy there. Okay, it's called confirmation entry. Hit your confluence, break a down, break one of these break one of these lower high structures and close, and then we wait for the discount, the retracement back to a newly created demand zone in this newly created impulse league. Okay, so that's your Aussie yen. Let's see, Euro New Zealand. Let's flip to the bearish side for a minute. And by the way, we do have U.S. oil on the bullish list for the first time in a while. So, yeah, going to be interesting to see what our crude oil inventories comes out to be on Wednesday. They are 2.5 million. I just had an alert hit. So, what just hit? Visa, everywhere you want to be. Let's see what Visa's got, guys. We're going to take a look at a stock real quick. Visa over here on the stock box is given a nice bullish score of a 9. You only have momentum going against this narrative, but for all the other technical sentiment and financial readings, Visa's looking pretty damn good. All these green boxes, okay? He's got them colored green instead of blue like he has on the Edge Finder. They're green over here on the stock box. So, I mean, everything's looking good. Let's go look at this demand zone on Visa that just got hit. Look at here. Ooh. Let's go to a daily. Are we not low on the curve? Is this not a discount zone? Hell yeah, it is. Hey, we had a forward demand back here on a smaller time frame that got hit right there. Price caught a bid from the 4-hour demand and jumped up. So now we've since come back to that same low point, and let's go down to the 4-hour to see what we got. Okay, and on a 4-hour chart, look at this. Okay, got a new demand zone here with a gigantic candle coming out. And this is what I want my fair value gaps to look like, ladies and gents. I want them to look like they've got brass huevos, just like this, okay? That's what you call a strong gap. In other words, demand heavily exceeded supply to the point that we gapped right straight through and left all this inefficient market structure. Other things I like is we've got a little bit of a megaphone pattern coming out of this. Look at this. I might need to. Actually, I got to redo this. Okay, this is a megaphone pattern. Watch this. If I just if we kind of look at that trend there, that upwards trend, and then we connect the bottom, well, it would basically be back here. I kind of got that right there. Yeah, like that. Okay, you had a low, you had a lower low, you had another lower low, which didn't quite go down further, but you had a bunch of higher highs here. Is that not a little bit of a opening up or a fanning out type of price action? Now, it doesn't look the greatest on the bottom side, but what we do have is a double bottom. Okay, I'm going to delete that and get it out the way. But you see we got this wick right here, followed by this most recent time price was down there. It's a double bottom. Okay, so we got some strong something there, probably just leftovers from the demand zone that we had. I like that. Let's take a look at this. I might be getting into this trade, ladies and gents. I'll have to do it over here on my other chart, though, or my other screen, because I don't have. I only have Visa. I only have stocks on my Ola Prime, my 100K challenge account. I don't have it on my other one. So I have to go over here and put it on the trade. Yeah, I might be getting in this trade, ladies and gents. Let's do this. put on my demand zone. Let's see. I need price to drop just a little more, and then I'm going to be in this mug. I'm just kind of putting in a pending order over here real quick. Right there, right there. Risk 200. Perfect. So there we go. That's what I like to see. Risk 200 bucks. All right, I'm just waiting for price to drop just a little more, guys, and I'm in this Visa trade because it's everywhere you want to be. Just like the old commercials. Anybody remember that commercial from the late 90s, I think? 80s, 90s? Anybody here in the States? I think that was the late 80s. I remember it from when I was a kid. Okay, I like it. I really like this point right here. I'm just going to get rid of the white box there. Yeah, I like that. I feel like that's a pretty good discount zone. Now, you had a whole bunch of ugly wicks around it, but again, I'm keeping an eye on the bottom of it because of this strong demand zone right here. Okay, you had volume increase on the volume spread analysis candles and the volume itself. Okay. That broke this structure. This is the important piece to this. We broke this structure right here. Okay, this demand, this consolidation showed where demand heavily exceeded supply. Thus, we get the gap and the push and the close above this swing high or this structure point. So not too far away from it, but yeah, if I go to, and that white line, actually, you know what? I'm getting in this trade right meow, I think. It looks a little different on my trade locker. I'm going to wait just a little bit. I could get in the trade now and be comfortable with it, but I think I want just a little more of a discount. You guys know how charts look a little different from platform to platform, the same asset. Yeah, on the trade locker, it's just a little bit lower. So yeah, I think I'll wait for that confirmation. So anyway, that's the Visa trade. We're going to basically look to come a little bit deeper, buy this, and then we can look for some potential supply zones up here. Okay. Possibly this. I don't know. Let's just put this here for now, and let's see if we have any supply there on. Let's see what the 4-hour looks like first. Okay, so you could possibly look for a profit target of being this candle here. I don't really like how tall this wick was, though. I like it when the body is snug against the wick before going the opposite way. But just to be on the safe side, as far as a profit target, that's an easy profit target right there. Oops, I did that wrong. Oh, come on, you stupid thing. Red. Okay. So this basing action right here, you got 2 candles of basing action, right? Before this big, strong drop. So I have to be aware of that point. If and when price, comes in, gets me into the trade, and then starts going in my favor. I don't want to get too greedy. By the time price comes up to here, I better have my stop loss to break even at minimum so that I'm not, so I'm not losing anything. Take the risk out of the trade as soon as possible. But if we kind of continue that megaphone type pattern, we're getting higher highs, are we not? So, yeah, I could see this thing just, going up here. Maybe a safe spot for this trade would be somewhere up here. But I do not want to ignore this strong looking supply zone So that's why when price, if it comes in, I get a trade, it starts going in my favor. When it gets here, I'm definitely making sure my stop loss is at break even, because it very easily could hit this supply zone. And then this supply zone could very easily push price all the way back the other way, stop me out for a loss, a needless loss. Okay. So that's going to be the point I'm keeping an eye on for the week for Visa. Taking a look. I just want to take a look over here. Quick review of the US dollar, guys. Okay, just another look at the bearish jobs data we did have in the last 7 calendar days. Okay, the jobless claims, the JOLTS, and the ADP numbers. And then again, Wednesday is super important, guys. Are we going to finally get some type of reprieve? Are we finally going to get some reprieve in the jobs data? Well, according to the economists, they think we are. Okay. Again, they're forecasting 70,000 jobs as opposed to the previous number of 50,000. So that would definitely be a welcome number. And then obviously the goal would be to have the reading hit 70,000 or higher. If it hits 69,000, if it hits 67,000, yes, it is an increase above the previous number, but it's not meeting expectations of the economists, which is the important piece. Okay, when we're talking about short-term trades. And I would say, and I personally would call 2 to 4 days like what I do. I would call that short-term. Okay, short-term swing trading. That's basically what I do. So, but yeah, we'll see. Okay, don't really want to jump the gun. Kind of honestly just want to find some of these cross assets right now, or crosses, stuff without the dollar at the moment. New Zealand dollar, our old friend, is back on the list. Speaking of dollar-based, let's take a look at that real quick. Yeah, I mean, I still have this 4-hour demand down here. Now, kind of like some of these other assets I've already been looking at. Okay, a lot of these Japanese yen-based assets have created this nice-looking 4-hour demand zone candle at the bottom. So we've got a lot of these. So the same, the same story rings true for this too. If we get a break up, close above some of these swing highs, and we can look at this as a daily demand. I mean, a 4-hour demand, possible buy. Right? But if price were to not close above this high, just like the previous one, then I'd be waiting for the demand zone underneath. So it really just depends on if we can break this structure and close above it right there. Okay. We either break the structure, and then that makes it tempting to buy the demand zone from this new this new impulse candle. Or if we don't, and this does not break a structure, that means it is not an impulse candle. That means I have to look for demand underneath it, which would be right there. So that's my play on Kiwi dollar. Let's see here. Yeah, we already went through Wednesday on the calendar, and just kind of rounding out the rest of the week, the pound's GDP number does come out Thursday morning at 1 a.m. Central Standard Time. Our weekly unemployment claims comes out at 7:30 on Thursday. And that's it until Friday. Friday's CPI number for the Swissy. And we do have our made-up number for the consumer price index, the inflation number, to round out the week on Friday. That is, again, a makeup, much like the NFP is a makeup number from Friday. Okay. So that's about it, ladies and gents. I think I'm going to go ahead and hop up out of here. I've officially hit the lunchtime doldrums. Okay, everybody's going to be at lunch. Market's probably going to slow down a little bit. I'm going to keep an eye on this Visa trade opportunity, and I will let y'all know tomorrow if I'm in it. So with that, have a wonderful day. I will be back at 6:30 a.m. tomorrow, Central Standard Time, and we'll go at it some more. So have a good one. I'll talk to you guys then.